Geopolitical forces and company earnings are dominating the sentiment toward stocks. The potential for war in the Middle East as the war in Ukraine continues on. War is terrible even at any time. In economic terms, the impact on crude prices is already being felt. Prices increased by more than 5% on fears of the potential impact on crude supply from the Middle East. The earnings season kicked off last week, lifting a gloomy market mood. Gains in bank stocks came after both J.P. Morgan Chase and Wells Fargo posted better than expected third-quarter earnings. Energy firms which have been strong recently continued their run. This was due to the gains in crude prices. In the week ahead, the third-quarter earnings season will continue. Investors will have to evaluate the earnings and economic data, all against the new backdrop of potential war. Leading the way will be Tesla, TSLA, and two healthcare stocks. Procter & Gamble, P&G, and Johnson & Johnson, J&J, will provide their earnings preview. Earnings announcements will continue with Netflix, NFLX, Bank of America, BAC, and Taiwan Semiconductor (TSM). This will give some insight to recent events that have dominated the news cycle. Being the bank failures earlier in 2023, the writers and actors strike, and the O-boom with TSM. On Friday, the S&P 500 index, SPY, closed down -0.50%, and the NASDAQ 100 index, QQQ, closed down -1.24%. On the economic front in the United States, the University of Michigan's October Consumer Confidence Index slid -5.1 points to a 5-month low of 63.0. This fell short of the forecasted of 67.0. Inflation expectations climbed as well, weighing on markets. Year-on-year inflation predictions unexpectedly rose to +3.8%, higher than the expected rate of 3.2%. On the plus side, the CEP Import Price Index ex-petroleum declined -0.3% m per meter, missing estimates of -0.1% m per meter. The core rate of retail sales in the United States is expected to rise slightly from August. The forecasted statistics on industrial output and housing starts are for growth month-on-month. Hanging over the market will be the continued uncertainty over interest rates. First, off the long end of the U.S. yield curve, one has to consider that, while choppy, yields are set to rise. This could be by 100 basis points or more in 2024. Short-term rates, the expectations are 10% or less that the FOMC will raise rates by +25 basis points at its next meeting. This meeting concludes on November 1. For the final meeting of 2023, markets are predicting a 30% likelihood of a 25 basis point hike at the December 13 meeting. Into 2024, markets are anticipating that the FOMC will begin decreasing rates. Possibly in the second half of 2024 in reaction to a predicted decline in U.S. economic activity. Thus expect the rotation and normalization of the yield curve. Investors will need to focus and adjust their equity risk premium accordingly. Euro Stoxx 50 closed down -1.48%. China's Shanghai Composite Index closed down -0.64%. Japan's Nikkei 225 today closed down -0.55%. All the graphs in this video are by BARCHART. If you are thinking of subscribing to BARCHART, my affiliate link is in the comments. Also included are my affiliate links to the online brokers, eToro, First Trade, and FX Primus. These videos give a quick overview of the U.S. stock markets with a couple of stock ideas. Issued on Mondays and Fridays based on the underlying blog. Visit my blog site www.smartestdata.blog. If you like these videos, hit like and subscribe, it really does help the channel. See you in the next video.